love that setup on gold. I want to take that trade too. Let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again!
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8Cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8Cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, everybody, welcome back to another live stream, and happy Tuesday to you. I saw yesterday that you guys were giving Ivan a hard time about hosting the live stream. You guys got to be nice to our guests when they take over the show. Yesterday, I was not in the office. Obviously, I wasn't on the stream. I am back today. Yesterday, I actually ended up closing on a house with my wife, and we're also getting over, you can hear it a little bit in my voice, getting over a little bit of a sickness, but back in the office today, I'm just to clarify, I am better. I've been better for the last few days. I'm just dealing with when you get sick and then that post kind of like congestion sticks with you for a few days. That's where I'm at. Anyways, yes, I closed on a house yesterday with my wife. Thank you. I see a bunch of people saying congrats. Thank you very much. I know that everybody has the goal of, well, most people have a goal of owning a home or something like that. But for me and my wife, that's been something that's like been extra special. But for me, on a personal note, I said this once before on the stream, but a large component of the down payment that went towards our home came from trading. And I say that as, if I could go back and let, early days Trader Nick know that that came true, it would be it was a very special thing. Long story short, trading has changed my life in many ways. But when I say trading helped make the down payment, I'm not talking about, YouTube and social media and the software business. I'm talking about straight up the returns that I have made in the markets. I took a good chunk of them recently, and that is what paid for a component of the down payment on our home. So it's take that as you will. Let it be maybe motivational to you. I don't know. I'm just going to say that for me personally, that was always a goal for me. That was always the end goal with trading was, I love the markets. I love learning about the financial markets. But at the end of the day, finance is all about dollar signs and all that sort of thing. And just as a milestone, that was sort of the highest totem pole item for me. I don't really have anything past that. Now it's just trading because I absolutely love it. So yeah, thank you very much for the congratulations. I appreciate it. It's a nice home. We're blessed. We're very grateful to be able to do that at our age. Stay true to your dreams. I'm not giving a very good motivational speak. It might be still that I'm overcoming my illnesses, but it's worth it. The hard work is worth it. But I will say the last thing I'll say on that note before we get into some chart analysis, because I know you guys don't care this much. Last thing I will say about it is focusing on being able to put a down payment on a house through my trading is not what made it so that I could use my trading profits to put a down payment on a house. Those things, that wasn't the motivation. Being able to afford a home is not the motivation for why I became a decent trader. I became a decent trader because I loved the learning about the markets. Like it was not about money. And suddenly it yielded something years and years and years and years later. I've been doing this for 8 years, 9 years. I've done this for a long time. So this was not an overnight thing. I've almost been at it for a decade, learning more and more every day, getting punched in the gut by the market countless times. So, it's one of those things. Every day you can learn something, and that's kind of the beauty of markets. Okay, let's jump into some charts. I was looking at Bitcoin this morning. Bitcoin, I was long around this area, around 70,000 per coin. Markets erupted. It was one of my best trades this year. And it pulled back, and I had a stop loss, guys, like right there. So I got stopped out. And when I say stopped out, I didn't lose money. Obviously, I made a good profit on this Bitcoin position. But ever since that moment, I've wondered if I made a mistake getting out and putting my stop a little too tight. Now, with that mistake, I didn't chase it, thank goodness, because now markets are rolling over a little bit for Bitcoin. But I am looking at this level now, this 92,000 level, as a possible point where I may rejoin the trade, correct my mistake, and widen my stop a little bit. So I just want to put that out there. That is something that I'm looking for possibly today. If we get a flush down on Bitcoin, I still like Bitcoin to the long side. I do think we probably head to 100,000, and I would like to be in the move rather than watching it happen. But I will have to watch it happen. If it does not give me an entry point, I'm not going to force a trade. I'm not going to chase a trade. This is where I'm at. I like this level, this 92,000 level from a technical perspective makes a lot of sense to me. And I would put a stop likely below the structure low. And if the market tanks, then I just take a loss. But I've been missing Bitcoin. I've been thinking about Bitcoin. I've been having dreams about Bitcoin, about wanting to re-enter my long position. The nice thing sometimes, though, so I was long Bitcoin. The cool thing is I will not re-enter with the same size that trade grew to be. I mean, you guys have to think the trade went up by like 45% at one point, about 40%. Went up like 40%. So I bought an ETF that tracks Bitcoin, IBIT. I was long IBIT, and the position grew by 40% in size, which is immense and very rare. Does not happen to be very often like that. So when I re-enter this trade, it will be a smaller position, which I'm actually glad for. Like that's one of the things that I like about sometimes trailing out of a trade and then re-entering is that when I do re-enter, it will be a smaller size. So I liked the trade a lot more over here. I felt like there was way more risk to reward over here because, again, it was pre-election and both following Trump's first election victory and Biden's election victory, actually, Bitcoin went up. So post-election, I liked that story quite a bit. So I like the trade a lot more over here, but I still like it enough to potentially get long again around 92. I'll give it a shot. That's kind of where I'm at with this. If I take that trade, I will share it inside of our Discord group for everybody in the room. If you're not in the Discord room, something to keep in mind is that we extended our sale here for Cyber Monday. So if you're somebody who is not in the Discord already, some of you guys might have gotten a copy of the Edge Finder. Make sure you also join us in the VIP room. If you're somebody who has the Edge Finder but not the VIP room, you're missing out. One of the cool things about being in the VIP room as well is that you can see the actual trades that I'm taking. You can see trades taken by Frank, by Chris Pulver, Ivan. All of those things are services that we offer. So if you're interested in joining the action over on Discord, you maybe have a copy of the Edge Finder. A lot of people picked up a copy during our Black Friday sale. That is, by the way, for Cyber Monday, Edge Finder is also still going to be 40% off. So if you want to pick up a VIP membership, or if you'd like to get access to the Edge Finder, everything is still 40% off until the end of this week For Cyber Monday, we extended it. We had some people who were asking for a little extra time. So don't miss your chance. 40% off. Send us a direct message using this link right here if you'd like to pick up a copy of the Edge Finder or join our VIP service. Get access to Chris Pulver's trades. Store-wide, we're still doing 40% off. And if you send us a direct message, we'll actually do for Cyber Monday 45% off. I know it's Tuesday, but I was out of the office on Monday, so just pretend it's Monday for a second. Yeah, don't miss it. 45% off. That is ending. That is going to be the last chance of the year to get such a significant discount off of anything in our store. So NASDAQ near the all-time highs, down just a little bit here, 0.25%. I'll tell you, when it comes to the indices, I would be definitely interested in being a buyer from a momentum basis, looking for a trade here. If we can break through these highs, retest, I like this idea, possible continuation. I think between now and year end, the path of least resistance for the market is higher. So I like the idea of getting long stocks if I can, finding entries on that. S&P 500, same sort of story here. You're hardly getting any pullbacks here, but if you get some sort of break, retest of structure here, I like the idea of possibly looking for long opportunities. Or if you get a bigger correction, if you get a pullback here, I would certainly be more interested in that. Lee, you asked, or you watched some of the options video. You know, the options videos that I put out, they do so bad on YouTube, and I get it. It's not for everybody, but I am going to keep making them because I wouldn't feel true to my my authentic goal of this channel if I didn't also share what I do with options, because it is a very big component of what I do in the market. A growing one, by the way. I do more and more with options by the day, it feels like. I have a lot of options trades on right now. If I go, there's all of our options trades. I've sold puts on silver, which is doing really well today. Exxon Mobil. Oh, I sold calls on Intel. I was curious to see how that, I don't know if this is up to date. Intel's down 1.9. This is great for my calls that I sold. And this, I think, is not yet updated because usually the options market takes a few minutes to update, at least within Webull. I think you can pay for faster data, but I trade options real slow and steady, so I don't need like super fast data. But I sold a call on Intel, which basically means I make money if Intel goes sideways or down. I sold calls at $27. So market's been trading down here, so that's kind of good for my Intel trade idea. VIX is up 1.4% here this morning. Gold is up 0.5%. Silver's up 1.6%. And I told you just a second ago that I actually sold puts on SLV. So I sold puts on SLV, and this is going really well, really quick, because silver, you can actually trade options on SLV. You can also trade it on silver futures, but I just prefer the ETF format. I sold puts on SLV at $26 per share. As long as market goes sideways, up, or slightly down, anytime it is above $26 by expiration date, I get to keep the full premium and have to do nothing, which means in this case, I would make a total of $570. You don't update SLV in the group? I did. I absolutely did. And if I didn't, then I will feel stupid, but I believe that I did. There it is. See? I sold 20 contracts of SLV, cash secured out of the money puts, sold them at $26. The market has gone up for silver. So now my puts are floating a $350 profit, or a 62.5% of max possible premium profit so far on SLV. We'll take that. That's a good little options trade going so far. Anyways, oil's up 1.1% today. Bitcoin is up, or I'm sorry, down 2%. I'm going to keep an eye on Bitcoin, guys, because this is a trade that I'd like to place, a directional trade, which is looking for 92. If we can get a pullback to Bitcoin, I may give that a shot. Another reason I like it so much more today is because it popped up on the Edge Finder. Here's a look at the Edge Finder's current bullish and bearish ratings. Let's go ahead and filter out neutrals. With the change of the month, guys, we've got a lot of seasonality coming into play. Right? December is a new month, and with new months, we get new historical seasonality shifts. So we're seeing seasonality start popping up some new interesting ideas. A lot of stuff now on the watch list for me. So I'm definitely going to keep an eye on the charts this week. Last few weeks, I've had a real light ability to find trades. Bitcoin is an idea that I'm very interested in. I've not seen Kiwi Swiss. That's a new one. The Nikkei, the Russell is getting a bullish rating. So if we get a dip in the Russell, I'm interested. Copper's flying though today. I could be wrong, but I believe copper is up and away. NASDAQ, SPX, Dow Jones, platinum. We're getting some industrial metals getting long bullish biases. We're getting oil bullish biases, which is quite interesting. And also trend is not currently agreeing with that. You can see, even though we're getting a bullish rating because of other factors, perhaps stronger than expected. Actually, am I missing something? Hold up. Oh, it did. U.S. manufacturing PMIs beat expectations. Was that yesterday? Guys, I was so out of it yesterday because of the closing. Oh, that's why. ISM manufacturing yesterday beat. All right, good news. That's actually great news for industrial commodities. So I like that call. The Edge Finder, I'm telling you, man, this is why I love this thing so freaking much, is because I can be out sick or closing on a house or, I don't know, jumping out of an airplane. And this thing is still tracking the economic data for me. And it told me my own strategy before I even figured out the data. Now, I know people always love to push back in my comment section. They're like, of course you love it so much. Of course you talk so high. You're selling it. Like, oh, you make all your money from selling software. I'm telling you, man, I show all the time my live broker statements. I preach by it. I find it very important to do so. I don't do it to brag and show you, oh my gosh, because if you wanted to, you can compare me to traders who make way more than me, right? There's social media influencers who are making millions of dollars in a month or something like that. That's not me. But I do make money in the markets, and I do show so because I sell something. I believe it's really important that if you're going to sell something, that you also show proven profitability. I love this software so much because it tells me, before I even get a chance to look at all the economic data myself, it tells me, generally speaking, how I'm going to feel, bullish or bearish about certain things. Absolutely love it. It saves me so much time. The Edge Finder is, in fact, an absolute beast. And I'm telling you what, I can't even say that it's like, oh, it's all, Nick's brain. The cool thing is that I feel like I'm just the director to some awesome orchestra, because we have an awesome team here at A1 Trading, but we also have so many people who contribute. I don't know why I said that. Contribute to the design of this tool. People who have questions about certain things, feedback, recommendations have led us to building it into the tool that it is today. But I just get so pumped when I see that stuff. Oil's getting a bullish rating because manufacturing PMIs beat yesterday, and that changed the whole scoring enough to actually put us into bullish territory. Contra brute, okay? The Edge Finder is a contra brute, okay? So love that. We had manufacturing PMI beat. All right. When we are looking at US oil, however, I still don't love the chart, not going to lie, but I'll look for breakouts. Yeah, I don't love this chart. I'll tell you that. I don't love the technical setup. And this is important to distinguish. The Edge Finder might be giving oil a bullish rating, but that doesn't mean that I go out and take a buy on oil. It just means that, okay, factors are looking tentatively bullish. Now, what am I looking for? Well, because the Edge Finder is giving me that bullish rating, I'm now going to hunt for bullish setups. So what I see here on the daily chart, which is where I do a lot of my analysis, we've got key levels of resistance right around 7150. I'd like to see that break. If we get something like that, boom, I like that a lot. I could, although this is not really how I like to trade, my momentum strategy, and so I won't actually take this trade, but you theoretically, somebody who trades a little different, maybe they're looking at a retest of support, and maybe you're willing to trade this range. I mean, you do what you want. None of this is obviously financial advice. I'm just sharing, my personal way to look for this would be, I'd like to see momentum pick up for oil, and then any pullback, as long as we still have that bullish rating on the Edge Finder, I like that quite a bit. Edge Finder helped me to sell all the yen pairs yesterday, and today all profited. Awesome. That's awesome. I mean, that's the thing. The Edge Finder is not going to do all the homework for you. It's not a automatic homework doer, but it certainly helps you. It's kind of like, how all the kids are using ChatGPT now to do their homework, right? I sound like old AF saying that. All the kids these days are using ChatGPT, but you know what I mean? Like everybody's using ChatGPT to do their homework and get stuff done. You still kind of have to have a knowledge of what you're asking ChatGPT, and probably using ChatGPT to help do your homework honestly probably helps you more than just doing it yourself. I know from personal experience, not being a student not that long ago, that if I had like ChatGPT to help me do physics homework or something. I went to school for CS, and some of those classes, computer science, some of those classes were so above my brain capacity. ChatGPT would have been a game changer because I would have actually learned stuff like more effectively. Anyways, my point with that is that I don't even know where I was going with that. I lost my train of thought, but yeah, I completely lost it. Anyways, WTI, interested to see if we can break 72. I like that idea if we do get that. Oh, I know where I was going with that. My point is, when you have software that helps you, it doesn't do everything for you. It doesn't, say like, oh, now you're obsolete and you're stupid. I mean, maybe some softwares do, but the Edge Finder trading is, I still think you need to have a competent risk management department going on in your brain. You still have to look for technical setups that make a lot of sense. So this is a tool. It's not the all-in-one holy grail system. Absolutely nothing is. Absolutely. It does. So does the Edge Finder put into account the monetary policy statement too, like hawkish or dovish stance? The answer is not directly, not like words being computed, but it does so through the economic data that all of the central banks are looking at, right? So if you're trying to figure out, is the Fed likely to be hawkish or dovish? You don't even need to listen to what they say. You just look at the economic data, and 99% of the time, the Fed matches what the data is looking like. So if the Fed is seeing strong economic data like we're seeing right now, right? Manufacturing PMIs, services PMIs, retail sales, unemployment rate's still low. I mean, there's a lot of strong economic data prints here. So when you look at that, you're going to say, okay, so basically Fed's going to probably be a little bit more on the hawkish side because they don't have to worry about cutting rates too quickly. They probably will still cut rates, but they're not in a rush to do so, which makes it more slightly hawkish, right? So you don't have to listen to them. You have to just look at the data that they're looking at. And that's the whole purpose of the Edge Finders. It calculates and computes that. Why are indices so bullish? If you're asking in terms of why the actual indices themselves are bullish right now, I would argue that it's a lot of the same reasons that you're getting bullish readings on the Edge Finder. COT, institutional money, is super long. Seasonally, it's a really bullish time for indices. Trend is to the upside. Manufacturing and services PMIs beat expectations. Retail sales, I mean, I love this plus 10 score. Again, another reason why I'm so adamantly a fan of the Edge Finder, and I use it, sell it, love it, design it. because this is telling me that the score is pretty dead set on. This makes a lot of sense. There's a lot of reasons to stay bullish in the market right now. Things could change. Something could come out of left field that changes the story. But currently, all conditions considered, if you've been listening to kind of, if you're just fighting this uptrend, that's been a rough fight, and you're probably losing, right? If you're trying to short this market, which is, again, seeing a strong economy, it's seeing the Fed, who still wants to cut rates, which is meaning the Fed's on our side. There's a lot of reasons to, in my opinion, stay bullish on the markets until something changes. There will be a point where it changes direction. It always does. But right now, it's a little bit tricky for me to try and say, oh yeah, we're going big time down. Because why, right? The economy's in a good place. Fed's looking like they want to cut rates. Interest rates seem to be coming down, etc. So overall, until that story changes, and it will, I'm not saying it's going to the moon forever. I'm just saying until that changes, why fight it? That's my personal take, my personal opinion on the indices side of things today. Anyways, guys, I mentioned this earlier, but we are extending our sale here through Cyber Monday till the end of the week. If you are not already using a copy of the Edge Finder or the brand new stock box, or you'd like to get access to our VIP group, all of it is 45% off if you send us a direct message using the link being dropped in the chat right now. Don't miss that sale. It is a massive discount to the usual price, almost half off of the usual price. And the best part about the Edge Finder, you don't have to pay monthly. It's a one-time payment and you've got access. So send us a direct message here if you're interested in getting access today, and we'll sort that out for you. And now we're going to take a quick break, and then we've got our next show host coming on. It is Forex James. Stay tuned. We'll be right back with James.
Hello. It's been a while. It feels like it's been months. It's only been a couple of days, though. Hope you're all doing well. How was your weekends? Paolo, use code ELITE. You get an extra 5% off the Edge Finder, and I think the stock box as well. But yeah, code ELITE gives you an extra 5% off, so go ahead and do that while you still can. Let me just see what's going on. God, this chat's quick. Hello, Mo. Bashi, good to see you. Okay, cool. Good stuff. So, portfolio update, doing good so far. Currently still shorting euro dollar. Nothing's changed. So you can see I've got some DCA positions on here. Sold down here yesterday, scaled in again this morning, and again not too long ago. So for targets on euro dollar, you can see here I've currently got 3 targets on. We've got 1.0, actually let me just double check what this one is. 1.03, 1.02, and 1.01. I'm looking for one more additional position, and then that position take profit will be at parity, which is 1.0. But yeah, that's the situation on euro dollar. I'm also currently short on the Dow as well, right here. So I'll go over the Dow position. It's nothing complex. It's actually a very boring idea, to be honest. So if we have a look on the Dow, so you can see, essentially, we're just seeing waves. It's a very classic uptrend here. So we had I think it's around 6-7% to the upside. We have now had 5.25%. I'm just looking for the second wave to the downside, also to fill this market gap that still hasn't been filled. So that's it. So very, very simple. Basically just trying to catch this pullback. And so far, it's looking quite good. It's a very small position, really. So if it doesn't work out, it doesn't work out. No issues. Anwin, I'm good. How are you doing? Why is GPY so strong? Oh, Gareth, I saw your message. JPY. JPY is strong because we've got two things. We've got Bank of Japan rate hikes coming. It's almost, in fact, it is. It's 100% expected that we're going to get a rate hike from the BOJ in December. We also have, excuse me, we also have an extremely high, or we did have an extremely high likelihood of a MOF intervention. Although that may not be the case now, as the yen is starting to strengthen, this hike may have done the job for the MOF, so we'll have to see. But essentially, it's a hawkish tone from the central bank in Japan that's helping drive some buying inflow. So that's essentially it from the yen. In terms of like day-to-day data, it's still pretty shockingly bad. But you know, if we've got a hawkish central bank and the majority of other major central banks are dovish, then it's, you know, we've got a clear winner. Ding, ding, ding. So looking for euro yen, this is sort of the main watch I've got at the minute. I'm a bit salty because I didn't quite get the entry I wanted. I was looking really towards this previous level of support for a very normal break and retest. The problem is this retest just wasn't high enough. Oh, it wasn't actually a retest. This pullback just wasn't high enough. So unfortunately didn't get the entry, but I still remain bearish. Let's see what's going on. Benny, hello. Your EU looks like it's got chicken pox. Any suggestions on Swiss yen? Actually, Anwin, what I'm going to do is I'm going to show you something that's pretty cool. I showed it to Nick, and I'm not sure if Nick's done anything with it yet. Let me just quickly find it. Just give me one moment. So this was Swiss yen. Oops, sorry. This was the Swiss yen edge finder reading. You can see very clearly -6 bearish reading. And then if we go and have a look at what Morgan Stanley, so this is a bank report from Morgan Stanley. It was on page 80. So what page is this? 67. Where are we at? 78. So we're almost there. Here. Swiss yen short, 17th November, entry level, target, stop loss, rationale. I don't know if you guys can actually read this. I'm not sure if my quality is a bit lower for you guys. But essentially, you know, you've got a bank signal on the edge finder that's been taken by Morgan Stanley, and this is their position laid out here. I actually took this. It was a very, very similar position. I made a nice 1% off that one. But yeah, I think overall, we can still remain bearish on pound yen, euro yen, Swiss yen, Australian dollar yen, US dollar yen, all of the yen pairs. Sorry, guys, I've got a bit of a sore throat, so I need to keep doing the coffee thing. So actually, yes, back to your point. If you are looking to trade Swiss yen, it's kind of in no man's land right now. You're in between levels, really. There's nothing here to really stop price. You've got very minor support level here, but I don't really see that being enough to support price or at least induce any buyers. So really from here, we might see some natural slowing and pullbacks, but overall, it wouldn't be a surprise if we can go into 165 or 165.4. But yeah, I think that would really be my target. It's interesting. They've got a target all the way down here. So you've got plenty of time, really, to try and get into this trade, but it's just melting at the moment. CHF hasn't moved as much as other yen pairs. Yeah, well, the CHF is quite a core currency, if you will. It's like a stable one. It's a good old reliable, if you will. Hi, James, but even with rate hike, it will still be way lower than USD or all other ones. Yeah, I mean, when you've got something that's strong like the yen and the dollar, the yen might still overall be a bit weaker than the dollar, which is why, you know, 1 yen doesn't equal 1 US dollar, if that makes sense. But it doesn't mean, actually, let me pull up the chart and make it a bit easier, I guess. Let's go to the daily here. So we've had all of this buying on dollar yen. And this was basically just because Japan had nothing to offer to buyers. And obviously, they had lower interest rates, which meant we could do a really nice carry trade. So you would get paid. If you bought down here, you would not have just profited from the actual pip movement, you would have been profiting from holding the trade itself. Whereas that's not really the case anymore. So we're seeing obviously outflow of carry trades, we're seeing profit taking, we're seeing more hawkish BOJ, and the situation, the landscape for this market is just not what it was. So we are going to see a movement to the downside, regardless of whether the yen is as strong as the dollar or not, if that makes sense. Hey James, where do you see gold going in the next 2 weeks? Do you think year end would be all-time high test for gold? That's a good question. Let's see. I'm actually completely out of gold in terms of my attention. I haven't really looked at gold at all recently. I know it's bullish on, oh, it's actually not. It was bullish very briefly on the Edge Finder, but it's gone. And that was the only indication I had to maybe buy this market. And right now, there isn't anything. So when I trade gold, I will only ever go in for a gold position in two situations. One, if the technicals and if we've got stable fundamentals that relatively support gold but nothing overwhelming, and the technicals is just so obvious, I'll take it, which we don't have in this situation. Or if we've got a really strong catalyst, so if we've got some sort of escalation in the Middle East, Russia, Ukraine, or we've got terrible US dollar news, then again that'll be a catalyst to buy. And at the moment there is neither of those factors for me. Caught a lovely sell on GC 20R. Wow, 20R. You made my quarterly return in one trade. Oh, we do have news. Good point. Let me pull it up so I don't forget. We've got job openings in just under 4 minutes. Why would you follow that crap report? Banks are supposed to create liquidity to take money from other traders. Why would they starve themselves with liquidity? Oh, Jason, you poor man. The bank reports aren't a public thing. They don't send them out to every Tom, Dick, and Harry on the road. The report I showed you is for private investors in that bank. So it's basically saying, what if I invested with you? I would want to know what trade you're looking at, why you're looking at them, what's your view, what's your outlook. And you wouldn't go and broadcast that to everyone because that's your idea, it's your proprietary information. And that's what you would send to me as a client. And that's the same situation. It's just that I have access to them. And obviously, like I said, you know, they wouldn't be telling me or telling us to go into this trade so they could liquidate us because look what's happened. So that logic doesn't really work out. It's more of a ICT fanboy ideology that I don't subscribe to. I also saw that in your weekly elite research didn't give me the pullback I wanted. Discord is so worth it. Cedric, I appreciate that. Thank you. Well, there's a lot of requests today. Let me just work through them. I need to read these messages here. Even euro yen is near support level. What's your thoughts on that? It doesn't matter. We might see temporary pullbacks again, just natural movements in the markets as we come into key levels. However, I remain short. Well, I remain a short bias in this market until we've got some sort of change. After the rate hike after the rate hike from the Bank of Japan, we may see a slight change in sentiment. I'm not 100% sure if we will or not. But yeah, I think once we get to the support level, I'll kind of just sit on the sidelines, and yeah, we'll see what happens from there. I don't like to go long on the yen because the swap is way too expensive to hold. You know what? It's actually a really good thing that you pay attention to that, because many people just trade. They don't pay attention to the fees, the commissions, the swaps. But yeah, obviously swaps become more relevant the more capital you have. But it's always a good thing. It's a good practice to get into, is just checking what you're going to be paying or what you're going to be receiving to hold that trade. Where did you get it? I can't tell you where I've got it from, but I give them out in my Discord every day. But I risk 0.25, James, because it doesn't affect my psychology. My risk management helps my psychology. I have low win rate, like 20 to 30%. When I win big. Very much like gambling. Well, if you're seeing returns, or if you're seeing consistent returns over 6 to 12 months, then I think you're doing fine. And if it works, it works. No one can tell you it doesn't. Oh, I've got access. Lol, kidding, all jokes aside, thanks for sharing it. Yeah, no problem. I mean, you know, I'm not trying to sit here and make out like it, you know, it's some secret source that I get them from. You know, I go into a car park at night with a hood on and get the secret envelope of bank reports. That's not it, obviously. There are sources out there that you can get them from, but I'm not going to promote that because obviously I sell them as well. So how old were you when you started trading? That's a good question. I was about 17, 18, roughly. How do you think 1 year and 3 year bonds are a good indicator of gold positions? Do you think 1 year, 3 year bonds? No, not really. Don't really care about that, to be perfectly honest with you. Yen pair pullbacks are opportunity to add more shorts. Ben, I completely agree. Job news. Yes, I forgot. Let me pull that up again. Oh, it's coming out now. So let's see what the result is. Okay, let me just refresh. I don't really like Forex Factory. I feel like the results always come out a bit late. Here we go, actually. Job openings had an increase. So forecasted was 7.51. Previous was 7.44. Good for the labor market. We've got more job openings, which is positive. Obviously, we've got more job openings that can generally lead to less unemployment. Actual is at 7.74. So let me just drag this over here. I can get rid of this. See what the dollar's doing. Although it wasn't a huge increase, so I wouldn't expect a big reaction from that. But overall, quite a positive result. Are you in any positions, Bernard? I am in positions, but I know you're in the Discord, so I'll tell you that afterwards. Hey, James, what are your thoughts on pound CAD? I'm looking to short pound Canadian, actually. Let me pull this up. Let me also just pull up something here so I can remember exactly what's going on with this one. So the UK, we've got slowing UK growth, consumer weakness, and relatively dovish BOE expectations, which is Bank of England. We have got higher borrowing costs, stronger confidence offset by weaker retail sales, economic headwinds, declining confidence. For Canadian dollar, we've got strong oil prices, resilient Canadian economy. Bank of Canada is on a neutral stance. Geopolitical risks, Russia, Ukraine, Middle East, OPEC plus supply cuts all benefit oil, which obviously benefit the Canadian dollar in turn. So this market actually does look quite nice to go to the downside. The problem is just getting that entry is a little bit difficult. I was DCAing this to downside, but I had to cut it at break even. I just wasn't too happy with the development. But generally speaking, this resistance level seems appropriate to start trying to sell from, which is just what I'm waiting for. I'm waiting for a slightly higher price so I can sell into this resistance and possibly take profits at this previous market gap down here. If you made 10% annual return trading, would you still do it? No, there's no point. I would be able to move money into different accounts and different investments to beat 10%. There's no point. And this is one of those things with trading. It sounds a bit demeaning, if that's the right word. But if you aren't able to outperform the S&P on average on a year-by-year basis, there is no point trading. There is just no reason to do it. You're allocating funds that you could just invest and make more money with. Obviously, it's fine to do as a hobby if you can't, but generally speaking, you wouldn't want to have all your net worth in a trading account and underperform the S&P. James, just watch your video, Dark Side of Forex Trading. Yeah, that was interesting to make. Sorry, I've missed out quite a few messages here. Open short position last Friday, pound CAD. It's been consolidating since I shorted. Yeah, that's exactly why I closed out. I was short on Thursday and Friday as well during Thanksgiving, and we just didn't get anything. Obviously, it's expected over that period, but there you go. I thought they were going to cover jobs. There isn't really much to cover on the jobs. We beat expectations, but nothing crazy. Hey, James, do you see a recession coming or expecting a soft landing? Soft landing. I don't really see a recession coming. I think if there is going to be a recession, it's going to be in the UK. Or at least in Europe. I think Europe's absolutely falling apart. It's a failed experiment, really. How much percent of monthly return is considered pretty decent and is sufficient to go full time? That's a double-edged sword, really, because 1% a month is good trading. You know, you're in the top 5% of traders, really, if you can do 1% a month on average. But obviously 1% a month on average isn't going to pay your bills. You'd need a lot of money or a lot of capital to do that. So if you can do anywhere from sort of 1 to 5% a month on average, I'd say that's pretty good. I don't have a public Discord link. You can go to elitetraders.io and get access there. Yes, so with the Elite Traders membership, you get bank reports, weekly webinars, signals, education, community chat, all that sort of stuff. It's all just one service. I don't have anything else to sell. Do you use Elliott Wave Theory? Absolutely not. I don't use any fancy technicals, really. UK pee me off so bad I want to leave. Bashi, come and leave with me. I'm moving to Asia pretty soon, so feel free to come and get a penthouse with me and we can share the rent and we can lock in. If recession hits the UK, what does that mean? What does that mean for the world? Because I'm trading from South Africa. If recession hits the UK, sell the pound. I'm in for 2 to 4% on a monthly, a month, consistent being the word. Yeah, 2 to 4% is realistic. It's completely fine. To pay your bills, what do you think you need in a trading account? Say £2,000 a month. Well, again, it depends on your average return. But to be safe and to the minimum amount, I would say is 50 to 100,000 British pounds. And that way you would at least be able to cover the bare essentials. So bills, rent, maybe a car payment or, you know, insurance, whatever else it might be. But even that's kind of on the low end. You'd really need 500,000 to $1 million to be happy, comfortable, and not too worried. Quick question. What bad exactly is happening in the UK? We've got all of the choices for our government, Labour, Tories, and whoever else, all completely hopeless. There is none of them know what they're doing. We had the Tories in for quite a while. We had the pound crash. We had pretty terrible response to COVID. We've now got Labour in that they've already had a petition. I think they've been in for 4 months, and there's now a petition going around the UK that's had 3 million signatures to have another election to try and get rid of them. So there's just no good parties there. Cost of living is extremely high. Rent is extremely high. It's just not a good place to be. Where in Asia? Not 100% sure yet. I'm a free spirit. Actually, I just need to make sure I'm not going over time here. I don't know who's on after me. Just give me a second. Okay, so Chris is on in just under 10 minutes. Okay. We could get a house. We could all get a house together in Asia. Yeah, no, so it's probably either Thailand, Bali, or South Korea. That's kind of the 3 options I've got at the moment. But anyway, we've got a very limited time left. So if there's any final chart requests, let me know. If not, I'm happy to sit here and chat to you guys. I'm not sure Brexit happened as intended. No, it definitely didn't. Brexit's been a complete failure. It's funny because in all the research I still read about the UK, it's always Brexit still getting brought up. The post-Brexit effects are still weighing on the UK. It's like 4 years after. What a failed country. And before anyone gets upset, I'm in the UK. I'm from the UK, so I'm allowed to say that. Get a villa in Manila. South Korea just imposed martial law. Okay, maybe I'm going to avoid South Korea then. Okay, so pound Australian, euro Australian. Right, we'll do that. And then I think Chris will be here, so I'll call it a day. Wait, what was it? Pound Australian. Okay. I would more look to go short, to be honest. Let's just see what the pound index is doing. It's basically just trailing the euro, essentially. So yeah, I'd be more looking to go short. I think the Australian dollar's pretty decent at the moment, especially with the commodities aspect of it. And yeah, situation with China doesn't seem too bad. The issue is there's nowhere to really get an entry, as far as I'm concerned. Also, we've got this daily time frame actually just respecting our 200 moving average here. So I wouldn't really want to sell into this. I'd more wait for a pullback into this level, and then look to go short. Look to go short from here. That's basically all I've got for this market, though, to be honest. I hope you guys understand by now that I don't really research every currency. I'll have a look. I'll find one thing or two things I'm really focused on, like euro dollar, which I am, and that's kind of the only thing that I've been looking into recently. So I'm not very good at just having all the general knowledge about all the currencies off the top of my head. Bashi, see you later. Have a good day. South Korean girls are so good looking. Avalanche, I'm a happily taken man. I'm not allowed to comment. Please go over why the GBP is weak compared to the JPY. Well, I wouldn't really focus on the pound, to be honest. If you're looking at pound yen, I'd more focus on the yen because the yen is dominating at the moment. And again, it goes back to the hawkish BOJ and the possible intervention. Again, I'm not sure we're going to get an intervention now, just because the yen has recovered quite well just off the back of the likelihood of a rate hike. So that's basically what's inducing all the buyers. We're starting to see the yen get some optimism again. Does watching market too much make you lose focus and get confused? How do you keep focused and be patient? Andy, yes, it does, I would say. It's a very fine line because obviously you don't want to miss things. So set alerts. But yeah, if you're trying to stay focused and patient, have a very clear strategy. So understand why you would want to take the trade and how you're going to take the trade, how you're going to manage it, plan it out, set it all up in TradingView or wherever you place a trade, set an alert. And then when your alert hits, go and check. If it's not hit, doesn't matter because your trade's not valid anyway. Speaking of trades, actually, let me have a look. Dow's doing quite nicely. Let's see if we can get this market gap fill. Euro dollar is pulling back. Hey, what's our P&L? Are we still in drawdown? Oh, wow, we're not. I was down $600 this morning in floating P&L, but now we're back in the green or the blue. When you have an open trade, how often do you check it during the day? I check it all the time. I sit here with my chart here. So exactly as you see it, I've got 3 monitors on the chart. Other monitor, actually, I don't know. I'm sure you get here. So you can see this is my desk. So this is the chart. This is where I'll do work and Discord. And this is where I'll watch a film or YouTube or whatever it is that's keeping me company throughout the day. So there you go. I hope that was insightful. So chat's quieting down. That's cool. I don't really have anything else to go over, to be honest. Just having to think. When you're swinging, trades for a few weeks, do you tend to risk more compared to scalping? Yes. So if I'm in a swing trade, I'll actually let me show you here, Swiss yen. So this is basically the trade I took. It was slightly different, but we can just say it was this one. So on this, if I'm looking to hold this for 1 to maybe even 3 weeks, I'll happily risk 3 to 4%, maybe a little bit more if I'm super confident. And that's just to make the time worth it. So I'm not going to risk 2%. I'm not going to risk 1% on this to now be in 1.2% profit after what 1 to 2 weeks when I could make 3-4% on euro dollar in 2 days. So the time and the risk has got to be worth it. It's like a job. You're not going to go to a job and work an hour for $1 an hour. It doesn't make sense. So that's the way I view it. Obviously that varies for everyone and risk tolerance and all that sort of stuff, but again, it's just my opinion and the way I do it. Do you want to talk briefly about mental health and trading? Some advice for traders with mental health. I've got about a minute left, and that's a very deep topic. So unfortunately not, Laura, and it's not because I don't want to. It's just because I don't have the time that topic deserves, really, to be honest. I do all those things, YouTube, etc. But in general, trading can be detrimental to mental health at the start, and then eventually it gets easier, but it's not for the weak. Well, I probably shouldn't say weak mind. That's not the right word. But it's not for people really that do struggle with certain problems. Just because it doesn't help, it can be very detrimental. What's the biggest drawdown you've experienced? Here you can see, actually. So I went from floating profit, a closed or realized profit of 5.48, and then went down to a peak of -7. And this was just one long losing streak. So that's probably the worst I've had, actually, for a couple of years, really. Do you follow other traders on YouTube? If so, who would you recommend to check out? Not really, to be honest. I watch Trader Nick's videos, obviously. But other than that, no, I don't. The reason I watch Nick's videos and don't just come to the streams is because the way that Nick and I trade is very similar. So we both pay attention to the economics, and there's been a lot of times where I'll watch one of his videos and be like, oh, I didn't even think about that, or I didn't pay attention to that, or I didn't know that. So it contributes to my own money making in the markets. Whereas a lot of YouTubers, especially trading YouTubers, are just useless. It's, oh, we've got a new 5-minute EMA strategy to make 100% in a month, or quit your 9 to 5 with this ridiculous astrology strategy. It's just not my jam. Cool. Anyway, guys, I'm going to head off because Chris is here. Chris will take good care of you guys. So thank you all. You've been a great people to talk to, as always. Have a great day, and I'll see you very, very soon.
'Twas the night before Christmas, and all through the house not a creature was stirring. Except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night, I'm not really sure how he did that. Pulver alerts are now available at a1trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
Hey everybody, happy Tuesday, welcome back. How we doing? Let's grab some comments. And gonna go find some trades today. So I had a chart alarm go off on AT&T. That's looking pretty good to continue to hold. If you bought some shares with me, I'm looking to hold this towards $27 to $28. Go to the weekly time frame. This has been a kind of a passion project in all AT&T. Strong support back here in 2002. Strong support again in 2009. Back here in 2022 and 2023, I was like, well, the value is there. So I've been in AT&T for a while. It's been the last couple of years. And here we are, crossing in the 20s, looking better, have some wiggle room to the upside, and hopefully some open space to continue to rip higher. So overall, it's doing just fine. So there's my AT&T up around $8,300, and hopefully if there's another, let's say, I don't know, $4 higher at about 1,000 shares, that'll add up pretty nicely. So anyway, I like that. I wanted to find a little MSTR action back up to 383. Everyone's having the big debate on whether or not Bitcoin can get to 100K. I wanted to take a look at a trade on MSTR if the implied volatility is high enough. MSTR, IV rank of 58. Coin is okay as well. I've got some 111s. Let me check on some of these positions here. So if I go MSTR right now, so as a whole, I think I'm up like $8,000 or $9,000, up about $8,300 on MSTR. Now that's with zero ownership. A lot of these are just crafted trades. That's a in the money bull call spread that's out for a while. I'm not really worried about that one. This one is a 111. That is a 100 by 95 bear put spread and then a 65 sell put. So I collected some net income on that one. And I'm going to do something similar to that with current prices. I know they're a bit elevated. A 111, it depends on how much lower I can go on the put side. I'd be kind of willing to say we could drop back to like $200, which from current price, that would be like Bitcoin falling 47%. I mean, maybe less. Maybe the what we've noticed here the last month or so is that MicroStrategy has kind of been this leverage proxy to Bitcoin. So as Bitcoin is going up, MicroStrategy is going up higher. As Bitcoin maybe pauses or pulls back, MicroStrategy pulls back deeper. So long story short, let me see where I can get a put level, and I don't want to overlap any expirations here. So I have January, February, March. Let's check and see what these look like. January, February, March. So I don't want to overlap those expirations necessarily. Maybe the January 10th, that's 38 days out. I don't have any expirations there. So let me look at a 111. Let's see. So $200 isn't bad. That's right back to this breakout point. So if I did a 205 by 200 and then I sell, what do I want for income? 175. So the buying power reduction is a little steeper than I want. Return on capital, if nothing were to happen other than me just collecting income, it's $240 for $79.91. Let me make sure that's the right account. So $241 divided by 7,991. That'd be a 3% return in about 38 days. It's not awful. Would I own shares of this? Sure, I could own some shares. I could flip this pretty aggressively. How much do I like MicroStrategy? I mean, I don't mind this trade. If I want to make this a little bit cheaper, move this down a little bit. Now I get 248. And we get $1.97. That's interesting. So I could buy, sell. That's a little bit more buying power. I think that's kind of my sweet spot there. All right, I'm gonna look at this trade, see if I can get filled for the bid ask is pretty wide. I mean, 240 mid price. I don't really want to take less than that. I'm gonna try to get 240 minimum. If I can get 245 or 250, I'll start there. So I'll put this on my portfolio margin accounts. This is a little income play out 38 days. Just grab another $240. That should pair nicely with the $2,000 I've got running right now on MicroStrategy. And all I need price to do is basically just stay above 200. So if we stay above 200, there's income on the trade. If you know what, I'm actually that'd be kind of still. I was gonna say I could do this both directions, and I could do basically a 111 here and a 111 here and collect a lot of premium. But in the event that Bitcoin were to make another rally, that would certainly sting to the upside. So I don't want to do that. Don't want to do that. All right. So I think I'm going to take this trade if I can get filled at let's say 245 to 250. So let's try the 255. $255 is not filling. I'll try to penny this down. 250 is going to be my lowest price that I'll accept. If I can't get the fill, then I won't take the trade. 252. Might as well try 250. You dirty dog. All right. Will I settle for 249? 248. All right. I'm going to change my minimum accepted price. It's going to be 245. If it doesn't fill, then I won't take the trade. All right, 245 final offer. Not filling. I mean, the bid price is 256. Come on. All right, I'm canceling that. Any other way I can craft this trade? I suppose if I just did a put, that's actually way more cost effective. I can just do a put, generate the income, get filled at the ask price or the bid price at 237, 180. So the reason I liked the 111 is because I have a bit of a bear trap. Let me see. What if I did like a 250 by 245? I mean, I like that trade a lot more. So if I buy the 250, sell the 245, I can still get $2 and maybe 30 cents of income. It reduces the buying power by a lot, and I still have my put out here at 180. That's not bad. All right, let me try this one again. Let me see if I get 240 for this. 240. Come on, man. 235, final offer. Son of a bee. $230 not filling. All right, cancel. Well, that's not going to work. Never mind. How about Netflix? I would like to think that Netflix is capable of a pause or a pullback. Let me see what the IV rank is on Netflix. Trading at 8.4 IV rank. That is crazy low. Premium should still be decent on Netflix, but I mean, I don't want to sit here and call the top necessarily. It's an expensive one that I don't really want to do a 111. Let me see. We don't have to get creative here today. If I go ES, maybe out through the Fed. So I've got the hedge on for this week is 60.50 by 60.55. If we stay below 60.50, that is a $2.50 winner on ES. We'll see what price ends up giving us. Just watching the SPY. Anything on NQ? Maybe I can get a nice little 111 going on NQ. Check this one out. NQ. Let's go out towards pre-Fed, the 17th. So if I went out to the 17th of December, how much wiggle room can I get for kind of a bear trap? Debatable. This would be, could we drop 5% at 20,000? Maybe. So if I were to buy the 20,000 put, go after a 50-point move, how low can I go on that? So let me see. I'm just looking at the buying power situation. So if I buy the 20,000, sell the 19,950, and then from there go to like 19,000. So I've got some profit potential. Only 100. The multiplier's a 2. Man, that's not that good. That's not that good at all. That's a lot of buying power. Never mind. All right, fudge it. Let's look elsewhere. So, what do I like? Right now, I'm gonna look at some currencies. So earnings wise this week, we have a couple of notables. Chewy, I have some exposure on. Let's actually do a spot check on some of these. So we have earnings after market today. We have Salesforce, OKTA, I actually was looking at one this morning, which I thought wasn't a terrible stock. It was AEO, which is American Eagle Outfitters. So let's go Salesforce. So CRM. CRM trading at 330. And let me see something here. CRM. Let's price out some options here. All right, let me get logged in. All right, CRM. So our average move on earnings is about 10%, and that's been pretty darn consistent. 9%, 9.7, 9.6, 12 and change, 10.7, 10.3, 10%, 6.83, 10.3, average is 10. So we have a stock that's $329. We're looking at about a 10% move. So 0.10 times 329, or I guess right now 320, yeah, 329.07. So about a 32.90 move. What's our ATR? Weekly ATR is about $18. Obviously, earnings is a bit of a push on top of that. Okay, and how many times did we at least hit 10% over the last 10 earnings reports? I'm looking for 10%. So let's find out. So if I cut it off after 8 days, looking for 10%, we do not get there. We do get there. We do not get there. We do get there. It's like she loves me not. We don't get there. We don't get there. We do get there. We do get there. We do, and we do. All right, that's not bad. So we actually have 6 out of 10 that have hit at least 10%. We do have to go out 8 days, so that would mean my expiration for CRM would be next Friday. Now the important thing is, can we price this one out enough to like it? So CRM getting some type of kind of overreaction. If I went out to the 13th, let's see, what would a bull call spread look like? If I buy the 330, let me see, could I take both these trades cheap enough? All right, easy way to trade this if I want to go in the money on a debit spread and try to get it where I can play both sides of it. If one pays over the other, that we make a net profit. Let's see, 329. So they've got market makers expect about a $24 move based on the implied volatility, and we're looking at about $32. So let's say that we go up 30 bucks. It's trading at 330 right now. If I were to, let's go 350. If I buy the 350, sell the 352, that only cost me 60 cents to make $1.90. That's a pretty good trade. And if I did the opposite of that, that's moving up 20 bucks. Let me go down 20 bucks. So if I buy, the strikes are crappy. So that one cost me $1.12 to make 388. And this one would be if I buy the 310 and sell the 305. Let me just take this one off for a second. Delete, delete. So that one cost me $1.28 to make 372. All right, so let's do some quick math. If I pay $1, so on a bear put spread, it's $1.28 debit, and my max profit would be $3.72. If I do a bull put spread, that one I think was $1.20. That would be the 350 by 355. So if I buy the 350, I think this is actually cheaper, $1.12, $1.18. So it's a little bit cheaper. $1.18 debit and 3.82 max profit. So let's say we have one winner, and that one winner is the minimum of 372. And I would lose $1. Let's say I lose the max of that. I could have a net profit of $2 and what, 44 cents. So I'd make a net 240. I could lose one, win one, make a net 240 if Salesforce is going to move. We're expecting maybe a $30 move, and if it did, half of that. Problem is, if I play both directions, I may not get full profit out of it, but is it enough profit potential to see a net gain on this? I think the answer is yes. We just need to see price really move. So let's debate this for a second. Could we go, if we hit the all-time highs, which I'm pretty sure that is, nope, it is not. It is, okay. So if we hit the all-time highs, that's only around a $20 move from current price. So if we hit the $20 move, we exceed that, we get to all-time highs, fantastic. If we plummet to the downside, I mean, it's cheap enough. How much do I like this trade? That's the question. So do I want to be a buyer or seller of this? Let me come back to this one. OKTA is cheap enough, not cheap enough. Let me go Chewy. Chewy's trading at 34. I do have some shares on Chewy. I'm looking to get this one called away at 37.50. I suppose I might be, it might be worth my time to buy some shares or buy a put. So here's my position on Chewy. Have my shares, have them covered. Chewy is tomorrow morning. So if I just buy some protection on Chewy, let me see if that's going to cost me anything. If I go to December 6th, if I buy like an out of the money, maybe 50 cents of protection, that's a little steep, man. Let me see. If I went out a week and change, I'll buy this protection at 25. Unlikely we're going to get there. We'd have to have a big drop at 25. But if we just have like a huge move to the downside and it kind of shifts around the options, I could turn a very inexpensive, I mean, it's only like a 4 delta. That's way out of the money. Maybe 20 cents. 7 delta. Just deciding. If we don't move to the downside, I'm wasting money here. If we do move to the downside, then I lower my cost basis. I could also roll my call. Just trying to think here. I don't want to pay too much for the put necessarily. I kind of like the $30 zone. This would cost me 40 bucks. This one cost me 60 bucks. 10 delta is not bad. All right, I'll buy this one. I'm going to buy a $28 put. I need to buy 2 contracts. Should be a total of like 58 cents. See if I can lower this a little bit. So 27 cents, 2 contracts, cost me $54. Not filling at 27. Let's try 28. Filled at 28 cents. All right, so I got a little protection on Chewy going into earnings. Dollar Tree, Dollar General. Take a quick peek at those. Dollar Tree. Actually, this one might be okay. This one could be cheap enough to take a stab at it. We've got some gaps to fill to the upside. Let me check on a couple of levels here. DLTR. Okay, let's go DLTR. Okay, fair value down to 61, showing it's actually still slightly overvalued. Could this fall lower? Yes. Would I have to risk an arm and a leg if I put in a debit spread? Probably not. DLTR. I went out to Friday. If I buy and sell. So I get 55 cents on the dollar if I'm right. If I go one strike higher, 58 cents on the dollar if I'm right. That would be a little bit better than that. If I were to do a bull put spread, collect 55 cents on the dollar for a credit spread. If price goes up, that's a pretty easy winner. 55 cents on the dollar. I guess if I did a credit spread, I could debate on I don't know, would I want to own this? Probably not. I don't know if the premiums are that good. What would a 30-day covered call option look like? So here's hypothetical. If I do a credit spread where I sell the 72, buy the 71, this is showing I could pull in about 55 to 57 cents of credit. So I'm risking less than I'm pulling in credit wise. If price were to go lower, I could still repair this. Probably wouldn't cost me an arm and a leg to repair it. I mean, I'm not making a bunch of money on the credit spread. I'd only make 55 cents a contract. But if I try to repair the stock, let me see what like a 30-day covered call looks like. So if I went out, let's say 30 days and selling at the money, and you get like $6 at the money. Like, it's pretty good. All right, I'm going to take a stab at this one. So if I do the December 6th, 72 by 71 or 73 by 72, see if I can get 60 cents on the dollar for this one. We're looking at a move about $10. I'll try to get filled. I'm going to take no less than like 55 cents if it'll fill me. I mean, if the mid price is 50, I'm not taking the trade. I'm going to try 60 cents right now. This is earnings on, this is Dollar Tree, so this is earnings Wednesday before market open. And then the other one would be Dollar General. So we got DG. Also, I mean, they're both like the same. Crazy. Is one better than the other? DG. I mean, that looks a lot better in the snowflake analysis. Aha. All right. Well, I'm going to switch my trade. Instead of DLTR, I'm going to go DG. This one fundamentally is a little bit stronger. We're trading at, we have an IV rank of 91 almost. That's pretty high. We're expecting about a $9 move on earnings. Dollar General's earnings are Thursday morning. If I did, let me go out to the 13th. If I sell the 79, buy the 78, same thing, like 55 cents on the dollar. Or if I were to buy the 79, sell the 80, 50 cents on the dollar, it's the same. It's a 1-to-1. Fudge, man. You can't just carve out a little bit of an edge. That's unfortunate. All right, this stock from the peak is down around 70%. Crazy stuff. $79 by 78, 55 cents on the dollar. I'm going to take this trade if I can get filled. I hope I can get filled here. Let's try it. All right, just filled 52. I put in 55, you turds. All right, I got filled for 52 cents, which is not what I wanted, but that's okay. So let's try this one again. Let's try 55 cents. So not filling at 55, 54. I might just have to settle for the 52. All right, 52 looks like it's the trade. Filled at 52. All right, next. There we go. Now that we got the trade. All right, I'll put this in the Pulver alerts here in just a moment. All right, so trade is in. This is Pulver alerts, stocks and options, new trade, DG, 12/13 expiration, sell the 79 put, buy the 78 put, 52 cents credit, earnings on 12/5 before market. Strong fundamentals, considering ownership if price falls lower post earnings. If you don't want to own, look for price to stay above 79 for income play. Okay, I'll take a quick snapshot, go down to the daily. So let's see if we have a little gap fill. All right, and we'll see if this does the trick. So plenty of upside. If we go lower than, 78, I'll debate on if I want to own the shares or not. I'm looking for a gap fill. The other one, if this is cheap enough, I'll look at a call option as well. So I'll put this screenshot in here. All right, so copy that, throw it in the alerts. There we go. All right, Pulver alerts are officially posted. And any other way to trade this. So the credit spread gives me the flexibility that if price goes lower, and this is what I'm interested in doing. If price were to drop, then I may use my long put to protect the downside and then consider some ownership and repair and try to repair this thing for a couple dollars. I'm only doing one contract, so it's not a huge repair, but if I could do, let's say $3 to $5 of net profit, I would consider doing that over like a 30 to 60 day window. If price goes up, of course, then I'll just keep the income at 52 cents. I'm looking to see maybe an inexpensive play would be, what's an out of the money here? I mean, we're only expecting about a $9 move. If I were to buy like an 85, I don't know. I don't want to spend $3 on it. It's like, that's my risk. If it doesn't go up, I'm screwed on that call option. So I'm not just going to buy a call option. If I were to buy, we're expecting a $9 move. Let's go 80. If I buy the 85, sell the 86. I mean, that's not a bad play. Cost me 20 cents to make $80. So if price were to hit our expected move closer to like $10, we could see that, 20-cent debit turn into maybe 60 to 70 cents credit, which is pretty good. Our max credit would be $1. So if we turn this into a win, that's just a cheap way to play it if it goes lower, or if it goes higher. So this is an inexpensive way to play a debit spread. The credit spread gives you the flexibility in case price goes lower. This one, you would need price to go up towards the higher end of the expected move. If it did have the $10 move, then you'd be totally fine. This would push price up towards like $89, and you're paying 20 cents to make $1. So you walk away with 80 cents. That's a pretty good gain. What is that gap fill right here? We come back into, $88. We come back into this gap fill at $97. If there's somehow a kind of a big surprise here. I don't mind that combo. Let's see. I'll try it. 85 by 86. Now it's 26 cents. I thought it was 20 cents. All right, never mind. All right, I'm just going to stick with the credit spread on DG. Call it good. So DG, I like that stock better than DLTR. Fundamentally, it's a little bit stronger. They're similar on the price styles. And I do have a nice little level at $80 that I'd be interested in seeing if it gets filled this week. But I like the credit spread. I'll stick with it. Okay, so that's DG. Anything else for earnings this week? That puts me on Thursday if I trade Dollar General. Foot Locker, Campbell's, Hormel, Kroger, DocuSign. Oh yeah, Lululemon. Let me see if I can get a trade in this one. Lululemon. Let's try a little 1-1-1 action on this one. IV rank is 72. Is this a stock that I want to own? Not particularly, but if I could own shares back in the 200s, I would consider if I can get an income play here. So let me have a look. So we have earnings. If I went out, let's say 38 to 45 days on this one, and I'm talking about $200. Man, there's not even a bid price there for the put. Well, obviously that's not great. I don't think this is going to work. I'm gonna have to put the order somewhere in here. I was looking at like a bear trap opportunity. Try to take ownership at like 230. Yeah, I just don't get any income for it. Don't love it. Never mind that. They have earnings on Thursday after close. DocuSign. Head and shoulder measure move. We almost got there. Anything else on DocuSign? Not really. What's the IV rank? Okay. This will be the last one, and then I'm going to switch over to some currencies. IV rank of 60. Okay. Fundamentally, earnings forecast declined by an average of 46% per year. It's probably not great. Price to earnings, price to sales, not bad. Fair value. It's got some room to the upside. 16.5 price to earnings versus peer average. Oof. So it's kind of cheap compared to its peers. We've had a good breakout to the upside. Could I do anything here at this neckline? $65 neckline on DocuSign. $65 neckline on DocuSign. Again, premiums just aren't that great. Sell a put. Do I like it that much for 60 bucks? Not really. I don't know. All right, let's switch it up. I'm gonna get some currencies. I feel like I'm forcing trades here, which I don't want to do. I've got some hedges. We'll watch and see what happens this week. News-wise, I mean the big ones this week. We have non-farm payroll on Friday. I'm looking to see if there's any outlier levels on the QQQ or the SPY. Right now, things are still pretty quiet. Next week is going to be pretty interesting. So we have non-farm payroll this week on Friday. Next week, we have US CPI, US PPI, and we have 3 rate decisions. We have Bank of Canada, Swiss National Bank, and European Central Bank all next week. So Forex could be a lot of interesting going into next week's trading. Let's just do a spot check on some of these currencies. I'm still long Aussie CAD. Plan is to take it back up to this resistance around 95. I'm still scalping my Aussie Swiss. I'm holding a long core position, but I'm scalping like every time we kind of test these levels. I'm just looking at these little like 20 pip winners. Yen pairs. I'm staying out of the yen, but I'm wondering if there is another kind of like seasonality move on the yen. Maybe, maybe not. Just keep an eye on it. Just don't like over leverage on the yen crosses. Aussie New Zealand, just not in a spot that I like. I think I mentioned this one earlier this week. If we come back down into some support, I wouldn't mind scooping some up. If we come back under resistance, I wouldn't mind selling it. If this is just going to be a channel trade, we'll see. You know, maybe something like that. But I would love to see some type of topping pattern to just trade a range. Just don't have it yet. Aussie dollar, I'm scaling into the longs. Looking to buy in at these lower levels, 64, 63, and 62. Willing to take it all the way down to 6,000. So those are pending orders on Aussie dollar. That one might be filled by the end of the year, and I'll hold on to that going into Q1 of next year. CAD Swiss still scalping and holding long for some positive swap. CAD yen, Swiss yen. Swiss yen I'm actually short on. It's up a few bucks there, up about $112. And I'm just going to measure this move. So let me go. Where's my rectangle? There we go. So high to low. So high to low, and look at some potential symmetry. So if we hit the lows back around 165 or 163, I'd be okay with that. I'm going to set a chart. I'm here around 164.50. And that's going to be a good enough measured move. So that means if we go high, low, lower high, lower low, good enough. Now, could that be like this bigger top in this currency? Yeah, maybe. You know, we could have a channel working our way lower. We could have, you know, bigger trends, all this crazy uptrend that we've seen for years and years and years on the Swiss yen. I mean, this is no joke. I mean, look at this thing. Going back to 2020, the Swiss yen has gone up 7,100 pips. Wow. And this is kind of the first real, you know, pattern and pullback that we've seen outside of a little correction back in 2022. Crazy stuff. So anyway, I'm currently short on this currency pair. I'm just going to hold it towards symmetry. I didn't get it aggressive as I you know initially was going to, just because it is the yen. So took off a little bit of the trade size. Euro Aussie, anything here? No, stuck between a couple levels. Euro CAD, I'm looking for a sell opportunity. I just don't trust the correlation right now with like the oil prices like sitting at those lows and peppering those lows. If oil ends up breaking lower, I don't see the CAD getting too much stronger. I'm also still long dollar CAD, so Euro CAD I'm just going to stay out of for right now. Euro Swiss, I am just holding Euro Swiss long and looking to see if this will eventually hold support, get on the right-hand side of this, and start to make its way back up towards 99 or 1.00. There's a big pocket all the way back here. So just holding. Euro pounds. Hang on one second. Okay, euro pound. I am just slightly under break even on the euro pound. I'm holding long on this one. I actually like the technicals on this. So we go back to kind of post Brexit. There's some inefficiencies here where I've got a stop loss just around this. Okay, should do the trick. Had to let this guy in. Speaking of letting guys in, what up, man? All right, we're good. Okay, so back to 2016. I'm long euro pound to see if this support level from 2020 and 2022 and 2024, if we hold, hopefully we have a little bit of a push to the upside. We'll see what the ECB does next week. Euro yen no trade. Euro New Zealand stuck between a range. So, I would buy Euro New Zealand around the 74 handle. I'd look to sell it around the 85 handle. Killing me, Smalls. Euro dollar. Euro dollar hanging out at 105. Let me ask, who's short euro dollar or who's long euro dollar? Does anybody do anything on euro dollar? I don't know if we have a official top yet on the dollar index. I talked about this yesterday. I'm just saying be a little cautious on like calling the top. I mean, I could see the dollar still being a little choppy in here through the holidays. We do have an ECB rate decision next week. We still have the Fed on the 18th. So, I mean, I'm still looking for a topping opportunity on the dollar. It looks like a pattern right here if we don't invalidate this high, but that pocket is right there. So I could see price, kind of testing and I don't know, being a little tricky at these levels. But I'm still going to look for a topping pattern on the dollar index. Worst case scenario would be that the dollar comes all the way back up here, which I think that's doubtful. So anyway, euro dollar. I didn't mind looking at some buys around the 105 handle. I just was a little shocked to see that was a really nasty flush through the 103.30. That's a nasty spill from, pretty strong support around 105, and that those PMI numbers and probably a bit of a liquidity flush all the way down to 103.30. Anyway, long story short, I think, well, I'm just going to say wishful thinking. If the euro dollar is going to retest this level or come into parity, I'm really interested in buying anything like parity and lower, like this. I would love an opportunity to scoop up some euro dollar long. I just don't know if this is going to be the bottom, So if that level holds, then I could definitely see a high to low. We pull back into like 107.50 to 108.00, and this is just support. This is resistance, and the dollar ends up going back into a range, and the euro dollar also ends up going back into a range. So Godspeed if you're holding. I'm going to kind of hold out and wait for bigger opportunity where I'd be willing to hold this thing for like months at a time, but probably nothing right now. So we'll see. Just don't look. I'm just telling you, like, I'm not calling the bottom here. So don't be surprised if we have another flush lower where it's here, a little bit of indecision, maybe pulls back and gets everyone excited around 106, but all this acts as resistance, and then we have another flush lower. So if we have another flush lower, I'll be looking at oversold conditions, looking to see if we bounce off parity. Then I'll start looking to scale back in euro dollar wise. So I don't know. Maybe it's a big trade opportunity for 2025, but something where I'm not really wanting to call like the top or the bottom on the dollars right now. Pound Aussie range bound, pound CAD no trade, pound Swiss I'm long, pound yen. It's a yen pair. Be careful. Pound New Zealand's still range bound. I do like the pound New Zealand. If we come back to resistance or we come back to support, interested in buying low or selling high, just keep an eye on this one. If this structure, let's say we pull back in here, pop back up to the upside, there could be a little bit of a breakout coming to retest those highs. So maybe something in the interim if you're watching. Pound US dollar, I did take a small buy trade on the pound US dollar. It didn't fill me at my second level. Or maybe, no, that's my net position. Sorry. So that's my net position. I'm upside down a little bit. I'm long pound dollar right now off of the daily trend line plus the what I was hoping for was a below the 200 EMA, back above the 200 EMA, and then just a little correction back into this pocket here. So like I said, there could be wishful thinking. The stop loss is there, so in case it does go lower, I'll get out of it. But we'll see. New Zealand CAD. Still long on this one, looking to get back towards 88. New Zealand Swiss. Scalping. Every little pullback and 20 pip scalp, that's fine. Plus I'm holding to a symmetry swing at 55. I'd like to say I'm going to hold this one towards 6,000. But we'll see. If we have this low, so this low to this high, that's my measured move towards symmetry. If that's a 3-wave, there could be a 4 and a 5 that gets me back up towards like 58. So I'll keep an eye on these measure moves for some of these Swiss crosses. I'm still holding these. It's been a long time, man. This is kind of annoying thing. If it wasn't for positive swap, I would be way more frustrated on these Swiss pairs, but I've actually generated a decent amount of capital profits just by having positive swap. So I'm not saying that's fun because I've had 2 years of basically zero profits other than swap. So we need to see something new happen on the Swiss crosses. Hopefully the Swiss National Bank will stay neutral to dovish, maybe cut more rates. We'll find out. Depends on their inflation situation. And New Zealand dollar. Currently long on this one for some open space. This is not the point that I'd say there's a bottom, but I'm testing there and there and there. So I'll test the levels. We've got some multi-year support on the New Zealand dollar, similar to the Aussie dollar. I do think that the Aussie dollar and New Zealand dollar will behave differently than the euro and the pound. Against the dollar, Aussie dollar versus New Zealand dollar, if we have risk appetite and we have some positive flows out of China, we typically see risk appetite favor the Aussie and the New Zealand dollar over the US dollar. I think those would probably behave better than holding, euro dollar long or pound dollar long. But just going to watch. Dollar CAD, I'm still long. Trading at 40.71. Hopefully we'll be revisiting this like 4,200 level soon, going all the way up towards 45 or higher. Dollar Swiss, I'm still long. Going to hold long towards 92, looking at dollar cost average in. Dollar yen. I don't know. Follow your short-term alignments. Perhaps this is a high to low. I'd be surprised if this is a lower high to lower low. I wouldn't be surprised to see this. There's a high to low, and then we go here and here and here and here and here and here. I could see the dollar yen doing something like that before we have a bigger move one way or the other. So just be careful. Trade your short-term alignments. If you're trading the yen crosses, you got to follow alignments and kind of scalp I don't think there's a big position trade here, and it's also a massively expensive negative swap. If you're holding, dollar yen short, it's a negative swap, like pretty bad, and the brokers will make you realize that pretty quickly. So that is what I'm trying to avoid, is getting stuck in a negative swap position. Okay. All right. So updates for today. New trade on Dollar General. Still have the hedge on ES this week. I looked at MicroStrategy, didn't love it. Coinbase, same type of thing. I've got some income plays. I'd like to get something on like a Netflix or even some of the Mag 7s. I have some ownership of Apple. Oh, you know what? I didn't roll that. I'm going to look at a roll today. I'm going to try to roll Apple up, either out another week or so, or just let it get called away. I only have 100 shares or 200 shares of it, so I think I'll just let it get called away and make the $6 or $7 profit. It's fine. That expiration is 12/13. So I own the shares at 223. They get called away at 230. I know the stock price is up to some fresh highs, but I capped it. It's still an income play at $600 to $700. Amazon trade up to 212. Also fine. I do like the stock a lot. This is one of my, I'll buy it forever type stocks. Google, have some debit spreads in this one that are looking pretty good. I don't mind actually going out longer term. Let me see here. Let me go like a longer term. What would a 111 look like on Google? If I went longer term, let's go into maybe April or March. Do I get any premiums? Where would I like to own Google? 147 is not bad. That'd be a decent discount. So that would be a 23+% discount. We have lows from March of this year. Let's see. Anything in the 150 handle, I'd be okay with. 150. Nope, it's not going to work. If I just did a ratio spread, maybe just a ratio spread. So the 150, a little bit of credit there. Let's see. Do I like it enough? I'd probably want to make over $100 on at least a credit play. 127, own it at 150. I take the break even at 140. It'd actually be below that low. It's not a bad spot. All right, let me think about this one. So what I'm debating on is if I put in a bit of a bear trap or ratio spread, I could do a 155 by 150. That gives me $5 if I see price dropping, so I get $5 of profit. I also get $1.27 on the ratio spread itself, so that's $6.27 off of the ownership price of 150. Means I can own the shares for 143.3, or actually .73. 143.73. What type of discount is that right now? 143.73 would be around a 15 to 16% discount from current price. That would be 143.73 would be about a 25% discount from the all-time highs. Are we going to face a big deleveraging with Google? I guess the only outlier would be like if these government probes and antitrust things become so problematic. I mean, it's been in the past. I mean, Google's dealt with that forever. So has all these Mag 7 stocks. Anyway, I like this trade. It doesn't take up a ton of buying power. I don't mind owning the shares. I'm going to take this trade. This is a 155 by 150. Fill should be pretty straightforward. Let me see if I can get 130 for it. $130, not filling. So let me replace this one. Try to get $1.29. 28. Bid is 20, or mid is 27. Filled at $1.27. All right, I don't mind that trade. $1.27 there. Okay, let's get these in. $1.27 got filled on one account, maybe $1.26 on others. All right, $1.26 got filled. $1.26 got filled. What the hell? All right, I got to check on that one. That has 0 buying power, so I got to check on that one. And let's go. Okay, so that's added in. New trade. Post this up and I'll let you go. This is a 3/21/25 expiration. Buy the 155 put. Sell the 150 put. And that is a $1.26 credit. Ratio spread. Willing to own. Google if price falls below 150. Break-even price of ownership is 143.74. Okay. Adding that in. So this one is 3/21 expiration, 155 buy put, 150 sell put. $1.26 credit. We'll need to own. So down here at this low, as long as price stays above that, that's money, money. Pretty low risk, discount of like 27 to 30% on a stock that's, I'd say, pretty solid for the portfolio. I don't think anyone's going to complain about, moving into 2025. I mean, having some energy exposure. Up that didn't look pretty good. Having some energy exposure. I mean, we're seeing Microsoft get it into the space. We're seeing Google get into the space. We're seeing nuclear power plant talks and AI infrastructure bills and all this things. Like big tech is getting into the space, which I think is really interesting for, a future play where it just keeps these stocks like pretty darn steady. All right. So that screenshot is getting posted now. Okay. New trade on DG, new trade on GOOGL. Pulver alerts posted. Pulver out. All right. Thanks, everybody. Have a good rest of the day. We'll see you tomorrow. Bye. Or not. We can keep going. New Pulver alerts posted. I'm typing in the chat right now. In A1 trading Discord. Got it. So DG and GOOGL. Update my tracker. 321 expiration. DG is credit spread, 79 by 78. Credit spread. That one was 52 cents on the dollar. $155. Buy put. Okay. Google's in. DG is in. Spreadsheet updated. Pulver alerts updated. We'll take a crack at it again tomorrow. All right. That'll do it for me. Thanks for being with us today. And keep those chats and comments coming in. Keep an eye on Discord. And we'll see what we have for earnings today. Aftermarket, we have Salesforce, OKTA, Marvell, Pure Storage, Innovative. Yeah, I mean, the ones notable to me is Salesforce and OKTA. Those are the two that I pay attention to. I like Dollar Tree and Dollar General, but fundamentally Dollar General is a bit more sound, so I'd rather consider owning or repairing there. I didn't find something I liked on Lululemon. I'm up in the air on. I bought a put on Chewy just to make some protection on the shares that I own. Otherwise, if Chewy goes up, I might look at rolling again and trying to grab a few more bucks. I'll get Apple called away in a couple weeks. This week, non-farm payroll coming up, so we'll talk more about that, and we'll just keep plugging away. All right, thanks everybody. Have a good rest of the day. See you. Bye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.